Okay, so we're back. We took a look at the article. What we want to do here is do two things. One is we want to quickly discuss this article that just came up on the news today about there's a apparent slowdown in house appreciation. And then the second thing we want to talk about is this offer on the Laveen property. Do we want to go ahead? Do we not want to go ahead? So starting with the article, the premise of the article is that properties have been appreciating 6 to 7% per year, and this is a nationwide, so it obviously doesn't specifically apply to Phoenix. But there's an apparent slowdown to 3%, and the whole premise of the Monopoly project is that we buy houses and we make money on the appreciation. So this is critical to the project from that point of view. But I guess Jeff and Lorraine, I'd just like to ask you to comment, a minute or two each of you on, you had a chance to read the article. I had a chance, and so I'll comment after them also.
So yeah, if the nationwide forecasts are saying 3%, I know that Phoenix numbers are a little higher moving into the future. That's not my forecast. That's many other people's analytical forecasts. So to me, Phoenix is a local market that's a little bit different right now than most other markets. So you can't look at national numbers and say they apply exactly to Phoenix. The main thing I think we need to remember here is we're in a very good place with real estate because we're still more affordable than just about every other major Southwest city, which is Albuquerque, Denver, LA County, San Diego, Seattle, which is depreciating in Portland. So we are in a very good spot, and people continue to flood in here. And the biggest thing you got to remember, we still have a lack of supply. So basic economic supply and demand curves apply in Phoenix. So yeah, we might slow down a little bit, but I don't believe we're heading towards any cliff. I think that we may have a minor, slowdown in appreciation, but it's still a great place to own property and rent to people. That'd be my take on it.
Okay, Lorraine?
Oh, I agree completely. We have affordable housing and beautiful weather, so I think we're going to be good.
Yeah.
Yep. Okay, yeah, I guess my take on the whole article, my initial reaction to the article was this is a bad time to start the Monopoly project. And when I thought about it, maybe it's a good time because the train will slow down a little, we'll jump on board, and then we'll take off again.
Yeah.
To use a train analogy, but
Well, and I would say this, Jim, if we were leveraging 100% and going in and not putting any money down, I would probably be a little bit more I'd have trepidation around that. But, to go into a market and you're putting 20 to 25% down, in this case 20, you're hedging your risk. You're hedging your risk because you're basically, your debt service goes way down, and whatever market we're in, there's always going to be renters.
Right.
And I don't see that slowing down in the American economy as people are going to rent because affordability has gotten so difficult.
Right. Okay, so anyway, if you're interested in the article, we'll put the URL up here on this video. So let's go back to the Laveen property. As you remember, we had gotten some additional information by calling the listing agent. He said he's got 3 offers. The best one, he sort of telegraphed what it was, $200K with the 3% concession. So if we want to make this offer and have any chance at all of getting it, we have to at least meet that and beat that. And so the question is do we want to go ahead? I guess coming back to the spreadsheet, again, we're coming back and it's coming back to the questions of what do the numbers say, since this is an investment, we're not buying the house for personal use. So right now the numbers show that if you put 20% down, you're basically in a break-even situation in terms of cash flow, in terms of income and expenses. If the property continues to appreciate, then of course you're making money on appreciation, capital, principal pay down, cash flow is helped by depreciation. So it's not an outstanding deal. Is where I'm going to.
You're right. It's not an outstanding deal. I think what you need to decide, maybe the whole Monopoly project needs to decide, is are we going to wait for the next correction if one does come and then jump in then, or in this situation, if it never comes, we have an opportunity cost where if you're basically going in here now in making this deal now, you're betting that that appreciation and the debt service reduction is better than if you wait a year or two out and buy property if there's a correction, which we're not guaranteed there is going to be a correction. But so you have to decide, is breaking even every month okay for you, and are you okay with the appreciation and the debt reduction only?
Okay, I think that was very well said, so I think we should go ahead and make the offer.
Okay.
And I think the offer is 200 with no concession.
Okay.
I think that puts us in a strong situation. Any more comments?
No, this is good. We'll actually, I'm going to have Lorraine and I work on that together, and then we'll do it electronically. So we'll send that to you this afternoon. I'm going to call the listing agent and tell them it's coming at that, and then tell them that don't banter with anybody until you see our offer. I'm going to get that offer to them today.
And just to be clear, when we make the offer, we don't discuss how we're going to structure the financing. We just explain that we have a pre-qualification letter, so we may want to change the structure of the financing as we go forward.
Yeah, there's in the offer, you typically write what the offer is and what % down you're going to pay. That's what you put in an offer. However, you can change the terms of that loan throughout the process. If you do that, you need to make sure as the buyer's agent that you notify the listing agent, because that's a material change in the loan and that could impact the closing. So that's a proper disclosure you need to make as a buyer's agent. But you can finance it however you want. What they care about the most is they're going to get their end money.
And the deal's going to close.
And
We have a strong
we have
buyer.
a strong buyer, which I will be selling that to the listing agent as soon as this meeting's over.
Okay, good.
Are you gonna indicate a particular closing date, like within 30 days, or do you care?
I'm going to ask him what would be a perfect closing date, because Jim is pretty flexible on closing dates.
Yeah, in this case, the sooner the better.
Okay,
Yeah.
okay.
Okay.
So you have a quicker close.
What's that?
So it's a quicker close.
Yeah. And the quicker we get it, own it, the quicker the appreciation accrues to us, and the sooner we can rent it, and so on and so forth.
Yep.
Okay.
Awesome.
Okay,
We'll get
sounds
started
good.
on it.
Deal?
Thank you,
Deal?
Jim.
Thank you, Lorraine. Thank you, everybody.
This has been great. Okay.
Okay,
Thanks,
go
guys.
ahead.